Well, here's how U.S. markets reacted to that Fed meeting overnight. You can see on our screens that the major U.S. indices all taking that news quite positively. Well, Peter McGuire from Trading Point explained why investors seem satisfied with what the Fed did.
Well, I think it probably settled a lot of traders' mindset, what we were expecting before Christmas, winding back, doubling the amount as far as taper to 30 billion to be taken off the table, and a far quicker response from the Fed with 3 rate rises for 22, a further 3 in 23, and a further 2 in 24, capping out at about 2.1%. So that seems to be the menu at the moment, and I think that most traders are fairly happy with that sort of response.
What is the outlook for inflation, though, going forward? Will this be able to tackle that?
Well, that's an unknown. It's certainly galloping away. We're over 40-year highs as far as inflation. So this is a very major concern for the Fed, and how they tackle it is going to only be one way, and that is traditionally rate rises. So it's a copybook approach. And where we roll from here, if we can contain inflation and get it under control by, say, the middle to the end of next year, then that will satisfy the Fed. If it can't, then you probably see a further aggressive rate rise hike in the 23 period.
Throw Omicron into the mix of all of this, and what's your outlook for the American economy next year?
Well, that's the unknown as far as that COVID outbreaks and Omicron and further development. So there creates, again, turmoil, and that can really change the mood as far as the Fed's concerned very, very quickly. So these are unprecedented times, and it's just a very much hold the wheel tightly and steer over the bumpy terrain.
Peter McGuire speaking to me a little earlier.